Hey, good afternoon, everybody. Bob, Trade Genius. I want to talk to you about a few things today, and of course, the whole impeachment debacle thingy is now done again. Now we found out there are senators that were doing these quid pro quo and all this other crap, and so the Senate passed a resolution saying we simply aren't going to impeach this president, and time to move on. We're done. And so hopefully this will put all this crazy stuff to end, but Democrats are desperate to get back in power, so they're just going to constantly try to sniff something out. But from the market standpoint, is the market's done with it, and that's what this little bounce was today. And so I have the hourly up here. With the indexes, I like looking at the hourly, and so what we have here is as the market was falling, okay, we were getting basically a divergence with price on the money flow. That means people were bidding this up as it was coming down, and so we were looking for an opportunity to take this long, and but it's still, in my view, likely a dead cat bounce here. So what's important for us to now look at is this candle right here. If we stay underneath this candle, which the high was 299.84, essentially 300 on SPY, okay, going into next month, then I think we're going to make a lower low, and we're painting out a kind of a head and shoulder pattern, which could bring this down another 8 points, bring it down to 288 area, and then we'll wait and see what happens. We're losing the buybacks, okay? Nobody knows what the heck's going on with these repos, okay? Somebody is in deep weeds, okay? And nobody's talking. And a bank or a set of banks ran out of cash, and so they had to get cash by selling their portfolio of mortgage-backed securities and their portfolio of U.S. Treasuries. Now, they could have ran out of cash because they're forced to buy Treasuries as part of being a primary dealer, but more likely is that they're probably having an issue with mismatching their liabilities with their loans, which means the liability is deposits. They have to cover withdrawals out of these checking accounts, and so but this is pretty huge. It was another $100 billion that was requested over the $75 billion that was going to be part of the daily program. So another $25 billion was requested, and they're just simply honoring it, and now we have all this cash out there. Some of it going to leak into the markets. I don't know. Is there something going to come back? I don't know. Is our government going to be stuck with non-performing loans? They tell us no, but we have no idea really. So unless somebody can audit them, which that always seems to go nowhere. But having said that, is we're starting to tap out again, and the difference here this time is when you start seeing these. Let's see if I can slide this back. When you start seeing this kind of flatline list, that means there's probably going to be a bit more of a move here while this trade settles out. So I'm expecting us to push into right into this midline here, or at least to the moving average, and then we're just going to have to wait and see. If it breaks 300, then it's going back to the top. Okay, it's simple as that. If not, then I'm looking at 288. And so we took a position right away this morning on the trade that we always love dearly, which is VXX, and nice little hammer, and so we bought some puts on it for next Friday. The trade's about 25% gain so far, and that was just the morning. And so I'm going to wait and see how the weekend progresses here. I sold the 23 against my 24 here, close to the end of the day before this move backed up here a little bit, and then we'll just have to wait and see if we get a push down, or do I close the trade out here because it's starting to turn back higher again. So I'm just watching my money flow here on that, and that'll tell me all I need to know. Other than that, I'm maintaining a short position with TQQQ, and I'll show that one to you. And so that one here, it backed right into this moving average. So when it pushed down like this, I sold puts against my position. I'm out to October on this, and so those will probably tomorrow, they'll probably be essentially worthless because I sold the 59s, and I captured pretty much all that premium. So that brings my cost down on my trade, and I bought those puts when the price was up in this range here. So I'm good on the trade, and I'm expecting the Qs to keep falling. They're going to get a lot of pressure here really soon here from the federal government and the FANG stocks, and people are going to start rotating out of those trades, and I think the Qs are going to have big troubles. So that's kind of the way I'm playing it. I'll use my VXX puts to hedge my TQQ, and then I'll just look for opportunities. We sold most of our miners yesterday. It was a good thing. They're giving back some today, and then we're just going to look for opportunities to get back into most of those again, and rinse and repeat, because that's going to be the trade. You know, people are talking about this deflationary trade that's coming because of the dollar. Just one thing you have to bear in mind, dollar and gold move together a lot, okay? It's not always dollar up, gold down. And when dollar and gold go together, you have to pay attention. And that means that there's some stress in the marketplace, that people are bidding on the two big safe havens. You know, the safe havens out there is gold, the dollar, and treasuries, all right? And then I'm sure Phil's going to talk about Bitcoin. You know, I could talk about it technically. Phil knows that whole space intimately, and I'm not going to get into his world on that. I'll just tell you from my perspective, I think it's a liquidity thing. I think somebody in China probably had to sell, okay, and they created a panic because the float's still too low on Bitcoin. There's not enough of the coins out there trading. People are grabbing them and holding them. So when these things come out, people wait. Just like they used to do this with gold and silver all the time too. They get these massive beatdowns. And then you wait a while to make sure the artillery is stopped, and then people will bid it back again. And that's what's happening here with Bitcoin. When you have these big moves like this, those aren't natural people all of a sudden saying, oh geez, this thing's overvalued. That's not what it looks like. Here, I'll get into it anyway. I said I wouldn't talk about it, I'm going to talk about it. So, but I just want to give you guys some sort of perspective here without really judging Bitcoin itself. But when you see moves like this, okay, this isn't a valuation move, all right? This is a purpose event to create a panic so that somebody can drive into their limit buys down here. Their hope is that what they lose starting this cascade, they're going to gain down here on the buy, okay? And that's what they do with gold and silver. They usually do 3 of these things, and with Bitcoin, I don't have enough experience watching these cascades, but that was the first thing that crossed my mind. And personally, what I like to do when you get these big moves down like this that don't V right back, is that I usually give it a couple days. Let everybody who was hoping it would come back, when it doesn't, they bail out, and then you're back to the strong hands again, and you can take the move higher. But you know, if you're a trader in the future and you follow what we do, and you have this set up, okay, is anything that comes down, even if it's on a downtrend like that, it penetrates down to 3 standard deviations on your time frame that you trade, is that, look, you have to buy this, okay? And then you can then take that trade back off because you just made a nice, look, if you bought down here when this thing was hitting around 8,000, 8,200, and this thing popped back up here to 8,700, you made yourself 8% in one day. Okay, that's the mindset you have to put yourself in when you're trading. You know, you don't have to think about whether Bitcoin's good or Bitcoin's bad, or this is that or that or this, or you were wrong or you were right. You know, you just look for these things, because when this thing penetrated down like this, you know, if you should have been sitting there, if you're a trader, saying, okay, I'm always watching in this zone here. If I'm ready to add, I want to add, okay? You know, and then when you get these hits, you take them. You know, we were getting sell signals up here, okay, and we're getting buy signals right back saying, hey, things neutral, neutral, neutral. We got a buy signal here, and then start to roll over, and then boom, big collapse on it. So just bear that in mind. And here, I'll take this one off because we don't use this for Bitcoin. So this is what I'm talking about here. So when I'm trading, I'm looking at these moves right here, okay? And Bitcoin's been playing tight. It hasn't been too extreme here of late. Obviously, you can see it. But then you got this big sell signal. We still haven't gotten a buy signal back yet from it. But a buy signal for me is that if you're waiting and you're watching, you're interested in this, okay? And that was where you would have pounced. And if you're just trading and you have your hodl coins, or you're in and out, and hey, maybe I take half off when it does this and put half back on when it gives me a buy, you'd have bought back. And then it's up to you if you want to be keeping them or not. But I'll let Phil talk about all the whys and wherefores on it. Needless to say, it's in a strong downtrend still at the moment on the hourly. Looking out at a higher level here on the 4 hour is that so you even penetrated down here too. This is a no-brainer trade. And looking at this from a 4 hour perspective, is it looks like it's setting up nicely. It tried to retest. That retest failed to go lower. So now you got to look for an opportunity for it to go higher. And looking at the slope on this is not that bad. You see here when it pinched in like this is when everybody was getting nervous. A big move's coming, a big move's coming. This is they call this the volatility squeeze, and this was how the pressure was released. So FYI for that. Anywho, we'll have more to talk about later. It was a kind of really slow day, but there was money to be made. So just like every day. You guys have a great day, and if you want to trade with us, check out tradelikeagenius.com. We'll help you position you guys into some right stuff. See you later. Bye-bye.